Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, February the 12th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We create two main hypotheses based on what the normal auction would look like, depending on who's in control, the buyers or the sellers. And then we look at two alternative hypotheses for expansion days. And right now, everything's been an expansion day. Even in the Globex tonight, we had 32 points of range in Globex. And that's tightening up from what we've seen in the last week. So we are back in price discovery, and things are starting to get interesting. We're coming down to a very important level right now, testing this 43 level, and the LDN, we've got double distribution overnight, so keep an eye on this. This is a pretty wide, low volume area, so we could break through it, or we could bounce pretty strong off of it. It's going to be my over-under line for the day. We are above the prior day range. So let's take a look at Friday. I did not trade. I was not feeling well. So again, Friday we had a huge range once again, but it was a big rally off the bottom there that we put in at the 25.30 and a quarter, and we rallied and we closed almost 100 points up. So we had a 100-point rotation, 107.50 off of the bottom. Think about that in one day. It's just been mind-boggling. We go from like no volatility to absolute extreme in the matter of 5 days. It's just it's been incredible. But it also creates some opportunity. You just have to keep things tight and light. You can't sit through 32-point and 42-point rotations. Look at what the average rotation was on Friday. The average rotation on Friday was 22.75 points. Well, for most retail traders, it's going to be difficult to sit through a rotation. So what I suggest that the room do is just get into sniper mode and catch rides along the way, and take decrease size and increase frequency, and just there's lots of opportunity. So it's easy to catch a 2 to 3 to 4 point move and just take it and get out, instead of trying to sit through heavy volatility and and putting yourself in jeopardy, especially if you get down early. You want to stay. So we opened auction in range on Friday. We chopped around, and then we tried to break below the prior day. We dipped down to the 66, and then we rotated back up. This is a nice impulse wave down. So this was a nice return to the mid. Now the problem is, if you took the mid, you're at, it doesn't look like much here, but you're at 32.25, and we actually got up to 98. Wait, did I get that right? No, I'm sorry. That's right. 92.25. We got up to 98. So even if you took this mid, you had to take a lot of heat, but the VWAP was a good trade, and you could have caught a nice ride down. And then we broke below the prior fractal low and below the low of the prior day, looking for that expansion. We were looking for a move back down into the 25.30 and the 27.75, with the targets along the way at the 57.75 and the 38, and the close of that gap down here. We closed another gap, and then the buyers stepped in, and man, they rotated it 57.25 points, came back 15 points to the midpoint, and then got the continuation, and just started started rotating back up. Problem is, look at the size of these rotations: 57, 15, 37, 30, 20, 32, 71. It's just a very difficult environment to try to trade in if you're trying to hold for larger targets. You just have to be practical, and say to yourself, "Hey, I can easily catch parts of these moves. I just can't stay and hold and try to build any type of position unless my account size allows it to do so." So, taking a look at the overnight, we opened the week at 26.28 and a quarter. So keep that in your journal. That's going to see if we get a positive or negative week. Inventory is about 90% net positive. We're currently above Friday's high of 37.75. We had a 32-point range, double distribution with a large LVN that they're starting to fill in now, below the 43 and above the 39, which is also the mid. Below the 39, target that 34. So let's just take a step back, take a look at the news quickly. I'm going to try to keep these short. We don't have a lot of news today. This is today, right? Today, yeah. So we don't have any news until 11:30, which is the 3-month bill auction. We had 6-month bill auction, and then 2 o'clock we got the federal budget. And that's it for the day. Just taking a look at what we've got on store for the week. Tuesday, we've got FOMC, Mester speaking. We've got Red Book. We've got 4-week bill auction, API weekly crude, and that's about it for Tuesday. Wednesday, 8:30, we have core retail sales and core CPI. That will be the big one. And then 10 o'clock, business inventories, and then crude inventories. Thursday, we've got core PPI, initial jobless claims, New York Empire State Manufacturing, Philly Fed, and then PPI, that will be the big one. And we got Canadian ADP, non-farm employment change. 10 o'clock, NAHB housing. 10:30 natural gas tips auction at 1 o'clock. And Bank of Canada governor speaking at 1:30. And then on Friday we've got building permits at 8:30 Eastern, housing starts, foreign securities from Canada, Michigan consumer expectations and sentiments at 10 o'clock, and that's big. So it's not a really big news day, news week this week, but we are still in earnings, so just keep that in mind. We're also the Olympics, so it's a feel-good time, so we might see some move back up. Taking a look at the macro. I always like to start looking at the monthly, see where we are in terms of the trend. I use a 9 EMA and a 20 SMA to gauge where we're challenging the trend at the 9 EMA and where we're violating the trend on breaking the 20 SMA. You can see we came back. The trend has been very strong. We had 14 months of one-time framing up. We've now halted the one-time framing and had a very decent correction, but we held the 9 EMA for the most part and are trading above it. So the trend on the monthly is still intact. On the weekly, different story. We broke below the 9 and the 20, and we're seeing the possibility of breaking below and holding below and starting a trend down on the weekly. We do have a possible start of a Mr. Sneaky, but it's still the first day of the week. But again, we're seeing the possibility of a trend change on the weekly as we come down in time frame. Going to the daily, you can see that the daily is showing that downward trend is starting, and we've got slope and separation to the downside, so we're getting some strength of the trend. You're going to be wanting to watch the 26.8375. The other level you want to watch above us is the 26.7575. That is the year open for the full session. So we're below the year open, and we might actually start to get a bearish year. But we still have repair work to do above. We've got an unequalized all-time high, so I'm watching these levels on the larger time frame very closely to see as we come up to them how we treat them, because if we can get back up, we can still change the trend on the smaller time frame and go back to what the trend is on the larger time frame of the monthly. Going to the intraday, you can see that we were trending down. They tried to take it back, they failed, and now they're trying to take it back again. And currently we're in this consolidation and repair work that we had to do for the auction on the larger picture. But the intraday is more neutral than bearish. And then going to the 30-minute, you can see that even though it's a large range, you can see that we're basically consolidating here and trying to hold above the 9 and the 20. We do have a naked cross down here at the 25.8750. If we get back into yesterday's session, our range, our 20-period full session daily range, average true range is 54.41. When was the last time we saw that? I can't even remember. I think it was back in 2000 when I saw those type of ranges. And you see how quickly we moved below that 43. So currently right now, our overnight high is up at 55. Our overnight low is down at 23. We're testing inside of the prior day range right now. 34.50 is your target below us. That is our micro composite VPOC, believe it or not, for the last 4 days. Let me bring up the bigger picture. You can see that we broke out of the balance up here and we rotated all the way down. I'm just going to move this to the back here. Moved all the way down. They tried to take it back. They failed to take it back, and then they went down again, and then we came all the way down and tested the lower side of this balance down here at the current fractal low down at the 25.30 and a quarter. And it's such a big range, it looks very busy, but as you expand out, the 4-day microcomposite VPOC is right around this former balance area at the 26.2850. It's currently at the 26.30 and a quarter. So that's going to be a major target below right now if we don't get outside of the prior day. And we could come down and get stuck in this upper wick up here as we chop in this distribution zone, which is still pretty large. So taking a look at the daily upside ATR and daily downside ATR. Our daily downside ATR off of the high is all the way down at 2650, which just takes us down to test takes us down to test that distribution. Normally, I wouldn't even consider a possibility of a move all the way down there again. But with this type of range we're seeing, it's something we have to think about. And our upside daily ATR target is up at 77.50, which is just above the high or the open of the year. Okay, and then the levels I'm going to be watching, again, it's very difficult to trade off of levels right now when you have this bigger range. So right now, we have a huge gap. Our close for Friday was at 26.18. And we're currently trading right now 26.34.50. So our half gap fill is going to be approximately 26.25. And again, this will have to be adjusted based on where we open. All right, so let's talk about levels. And again, I'm not going to put a lot of levels on the chart because I'm expecting a lot of large rotations. But the key areas I'm going to be watching for targets and rotations and trade areas. Well, 43 was my over underline. We came down and we broke below that, and we're coming down. And our first target was where the VPOC was for most of the night. We could get a Globex VPOC shift down here if we come and trade some more down here. So we'll have to make an adjustment. But right now, our overnight VPOC is up at 49 and a quarter. We're currently trading inside of yesterday's range, and we're below the over-under, the LVN area down here. So as long as we hold below the 43, I'm still targeting the key magnet below, which is this 26.30 and a quarter, because that's where the buyers and the sellers most like to do business in the last 4 days. And I would expect that they would advertise price down there and possibly come down and get a half gap fill, if not fill the gap all the way down to 18. We have the capabilities to trade down there. So right now, our Keltner, we've got a zipper measured move right now. Let me just clean this up here for a second. We have a zipper measured move that goes all the way up. There's your impulse wave down, and that target takes us down to the 28 and a quarter. Which basically takes us to what would be our calculated value area. That really there's no value right now because we're in price discovery, but we have a zipper measured move down there. So again, as long as we're below the 43, my main target below is 30 and a quarter, the zipper measured move and the half gap fill and the takeout of the overnight low. We get back above the range from Friday and above the 43, then I'm looking for a move back towards the year open up here at the 75 and targeting the 62 area. And the we did get the VPOC shift down on the Globex. So there's the overnight VPOC has shifted now down to 34. Is it 34? 35 and a quarter. So big, it's so hard to get all these numbers exact. You're having to expand everything out. So what am I looking for in in terms of trade? Well, inventory is pretty much net positive, so I'm looking for an open auction in range, a move up towards that 43 area, 37.75, somewhere in there. I'm looking for responsive sellers to step in and rotate us down into targeting this 30 and a quarter, and a push through down to take out the overnight low and start chopping and creating a base down here, and then start working our way back and spending a rotational day, between the 43 and the 23. That is hypo 1. Hypo 2 is an open auction in range, a move down into the 23, come down, close the gap, and then find a base, maybe test the 2600 level, and then start rotating and working our way back and trading back up into that 30 and a quarter and chopping between the 2600 and the 2643. That is hypo 2. And they're equally weighted because of the size of the rotation. So I think we're going to hit these levels regardless on both sides. Hypo 4, or hypo 3, I should say, is an open test drive, failure to close the gap, a break up into the 43, get above the 43, and push up towards the 75, and have a positive day with buyers taking control. Hypo 4, which has to give equal weight to hypo 3 because of the range and because of the volatility, and the fact that we are in a start of a daily downtrend and a possible weekly downtrend. I'm looking for a open drive down to test the 2600, fail at the 2600, come down to the 2590, chop in this area, and then push down towards this 25, 60, 650 and start basing and rotating between the 23 and the 66 area. So those are my main hypotheses. I'm going to just end it there. I want to keep this as short as I can, and I've already gone way too long. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.